Because Treasury Secretary Steven Mnuchin is going to testify today. He's appearing in front of the House Financial Services Committee. How convenient, the Treasury Secretary on a day like this. Sean Duffy is with us, Republican from Wisconsin. He's on the committee. Sean Duffy is going to be asking questions. You're going to ask him questions about the stock market, Sean?
Well, I think so. This is a hearing that's based on the Financial Stability Oversight Council, or
Right.
FSOC. So we're going to ask him questions about that and systemically risky financial institutions and whether it should be based on size versus activity. Those are the ground level conversations. But I think there's going to be a lot of interest in the stock market and what's happened with the correction over the last several days.
You've got to ask him about algorithms. To what degree was yesterday's panic, where the Dow dropped to close to 1,000 points in an hour? You've got to ask him, was that anything to do with program trading, as it used to be called?
Yeah. Well, I think it's also important, too, like you and Maria both pointed out that the market has come down because of great fundamentals in the economy, that things are going so well. There's concern about inflation. There's concern about higher interest rates. And what has that done for the stock market? Those are all interesting points to debate with him. But I think Democrats are going to probably try to hit him on the fact that the market has declined because Donald Trump has tied a lot of his politics to a great stock market.
I've got to tell you, Sean, I think that's bogus. The president is right to claim credit for the stock market run-up because it's his policies which have created the stock market run-up. I don't think he should say anything about what's happened over the last few days. I don't think a president should stick his own opinions or his own views into a sharply falling stock market. What say you?
I agree with you. I think, listen, to tie ourselves to a market which we can't control is always dangerous. But from a political standpoint, I think that let this market cool down a little bit because the greater it gets overheated, the greater the fall will be when it corrects. We want to make sure that we have some slow and steady, consistent growth in the market as opposed to large run-ups, because in the long run, if it crashes right before an election, it's not the fact that it's bad, Republican policy on taxes or on regulation. It's a look to the markets, and that's never a good place for us to be. So listen. I think you're right, but I think Democrats, as they come into the hearing with Mnuchin, are going to try to make this point, this political on President Trump. But again, we're up, still 35% since Donald Trump's election?
That is correct. Yes, we are. We've lost the gains of 2018. We're holding on to the gains from post-election all the way through to the end of 2017, holding on to those gains. Last one. What do you want to hear from Secretary Mnuchin today?
Listen, I think, the bedrock of free enterprise is our capital markets, and making sure that we have sound regulation, not over-regulation, is key. We have a new regime in place. Mr. Mnuchin's been there for a year to make sure that he has the right balance on regulation. I want to hear his thoughts on this Financial Stability Oversight Council, that it has huge impacts on designating big financial institutions as significantly or systemically risky. Getting his views out, I think, is going to be important, which is the trajectory that we're going to be on for the next at least 3 years and hopefully 7 years with the Trump administration.
All right, Sean, thanks very much for coming on the show this morning on a busy day.
Thanks,
we do appreciate it, sir.